The crypto market continues to crash due to one key factor, and Ex-Binance CEO CZ has been sentenced to jail time. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody, and if you're new here, make sure to like, subscribe, and turn on notifications so you know when I drop latest content. Follow us on Twitter, Altcoin Buzz IO, and as always, not financial advice, and we wish you the best of luck in your crypto ventures.
And so if this market pulls back hard under this level and then consolidates and comes back, we're likely to sell and stall.
With the Fed interest rate decision expected today, the market has turned bearish and Bitcoin crashed by over 5% within a few hours. The key support levels now for Bitcoin are 52,000 and 48,500. The key resistance levels are 57,500 and 63,800. Since April, Bitcoin has been making lower lows, which confirms a bearish trend, at least in the short to medium term timeframe. Unfortunately, this has not changed in May, as the month started with a new Bitcoin low. Bitcoin just dropped under $57,000, and in the process, it broke the support at 58K. In a significant shift, market expectations for rate cuts have drastically reduced since the beginning of the year. Initially, January saw discussions of a fantasy scenario involving 6 rate cuts. However, the current sentiment anticipates only 1 rate cut by December. Some of the largest Wall Street banking giants remain divided over when the first rate cuts by the Fed are coming. The CNN report states JP Morgan and Goldman Sachs are forecasting the initial rate cut to occur in July, with Wells Fargo placing its bet in September. On the other hand, Bank of America's projections point towards the first cut not materializing until December. Interestingly, some Fed policymakers have even discussed the potential for a rate hike instead of a cut, adding further complexity to the evolving economic landscape. Market analysts are expecting that the strong inflation print will force the Fed to hold the interest rates higher for a longer term. However, some believe this could lead to a situation of stagflation as GDP growth will take a hit. The crypto market has also succumbed to downward price pressure, experiencing a notable decline before the FOMC. Altcoins bore the brunt of this downturn, exacerbated by concerns surrounding the Federal Reserve's anticipated decision to maintain high interest rates. Today's YouTube news is sponsored by Sui. You may not have noticed lately, but Sui is fast becoming a home for some terrific airdrops. DeepBook, Sui's premier gateway for liquidity, has already had one airdrop, and a second one is coming soon. Other Sui ecosystem projects are airdropping soon as well, and the easiest way to get them is buying Sui and holding in the Sui Wallet. There's a new mobile version available, so try the Sui Wallet out today with the link down below. Ex-Binance CEO CZ may be off to federal prison for financial crimes that led to the cryptocurrency exchange he founded to agree to pay a $4.3 billion fine, but his reputation, at least in the Seattle courtroom on Tuesday, was never better. The judge, CZ's defense lawyers, and even the prosecutors acknowledged during the 2.5-hour sentencing hearing that this 47-year-old billionaire was not your run-of-the-mill criminal defendant. Instead, he was a philanthropist, a do-gooder, a first-time lawbreaker, and a family man who turned himself in to accept whatever may come. CZ received a tremendously light sentence of 4 months, far less than the 3 years prosecutors sought to punish him for. The U.S. Judge Richard Jones said, "To be honest with you, sir, everything I see about your history and characteristics are of mitigating nature." He recalled going through a book of glowing sentencing letters that CZ's friends and family had submitted. He is still due to spend 4 months in prison for failing to implement effective money laundering controls as CEO of Binance. Binance founder CZ's 4-month prison sentence for money laundering appears to be an act of general deterrence, with the judge sending a clear message of compliance to the crypto industry, according to lawyer Aaron Lane. Lane said general deterrence appears to be the main rationale behind the term of imprisonment. The judge has sent a message, not to CZ individually, but to the entire industry, that anti-money laundering compliance must be taken seriously. While the charges were serious, they were of a regulatory nature and weren't directly comparable to FTX co-founder Sam Bankman-Fried's fraud conviction, which landed him 25 years in prison. CZ wrote on X shortly after, saying, "I would like to thank everyone for your care and support, being it writing letters, showing support on X, or in any other form. They all mean a lot to me and keep me strong. I'll do my time, conclude this phase, and focus on the next chapter of my life, education. I will remain a passive investor and holder in crypto. Our industry has entered a new phase. Compliance is super important. A silver lining of this whole process is that Binance has been under a microscope and funds are safe who protect users." Real-world asset tokenization protocols have witnessed a remarkable surge over the past year, with the total value locked in the sector reaching a new milestone. According to blockchain analytics and research firm Masari, the TVL for RWA protocols soared to nearly $8 billion by the end of April. The significant growth in the RWA sector can be attributed to the market's increasing preference for high-yield, debt-based investments. The analytics firm noted that RWA protocols have experienced a remarkable resurgence driven by this market demand. It is important to note that the $8 billion TVL figure excludes fiat-backed stablecoins like Tether and USDC. Instead, it encompasses various areas such as carry trade protocols, underwriting, yield-bearing stablecoins, commodities, securities, and real estate tokenization protocols. The TVL and RWA protocols has surged by almost 60% since February, indicating the rapid pace of the growth in this sector. Dune Analytics data revealed a surge in popularity among small retail users, highlighting the growing adoption of RWA protocols. Some protocols have played a significant role in driving this growth, particularly in terms of active users. Digital carbon market platforms like Toucan and KlimaDAO, as well as the real estate tokenization protocol Propi, have experienced substantial user growth. Tokenized treasuries have also seen remarkable expansion as yields remain high in an environment of elevated inflation and interest rates in the United States. The RWA.XYZ platform reported a record $1.29 billion locked in tokenized US treasuries and bonds, representing an 80% surge since the beginning of 2024. Protocols such as Securitize and Ondo have contributed heavily to this growth. Our partners at Commonwealth have just launched their Alpha Fund. The Alpha Fund from Commonwealth targets a diverse portfolio of highly anticipated early-stage Web3 projects with a special interest in AI, Bitcoin ecosystem, real-world assets, on-chain, decentralized physical infrastructure networks or DePIN, and Web3 gaming. Commonwealth is a community-owned and operated early-stage investment platform for everyone, providing an all-access pass for retail investors to take control of their financial future. They're disrupting, scaling, and optimizing the traditional venture capital investment model using Web3 principles and technology. Early-stage VC access for the 99%, fully decentralized, fully on-chain, the way it was meant to be. The Alpha Fund is now live to participate in on the Commonwealth app. It's a $1 million cap. It's first come, first served chance to get exclusive access. It's the earliest stage access to the biggest narratives of tomorrow. Check out Commonwealth and their Alpha Fund with a link down below. Staking infrastructure provider SSV Network has hit a major milestone with the total value locked in its protocol, reaching $2 billion in staked ETH. SSV has also partnered with EtherFi, who has integrated SSV's Distributed Validator Technology, or DVT, into their leading restaking platform. In just 30 days, the total value locked in Ethereum staked within SSV's decentralized protocol has doubled, currently standing at over $2 billion. This means the number of Ethereum validators utilizing SSV has also doubled over the same period and now numbers over 19,000. The SSV network protocol currently secures more than 568,000 ETH, with just under 400 node operators, including lead staking providers. EtherFi has become the latest restaking provider to integrate SSV's implementation of distributed validator technology. By integrating SSV's DVT infrastructure into its existing restaking offering, EtherFi has decentralized its staking operations and gained greater fault tolerance. One of the key benefits of SSV's DVT infrastructure is that it allows any staking application to access a globally distributed network of highly performant node operators. By connecting to geographically distributed nodes, EtherFi can increase the diversity of its node operator setup and in the process, secure the ETH staked on Ethereum's base layer. In recent weeks, EtherFi has onboarded almost 2,000 validators to the SSV network, adding $200 million to its TVL. This has improved the protocol efficiency while enhancing overall performance and network stability.